Hi, everybody. This is Lee with the Market Sense for the week of March 2nd, 2021. Market Sense. God, it's going to be fun to make sense of the price action we've seen here. The charts we're about to show you come from the Trade Navigator software, and let's get right into a weekly bond market chart here. This sucker has dumped in a major way despite the Fed's best attempts to support it. This is a great example of how I don't think any amount of money allows anybody to control the market. The Federal Reserve certainly does not want bond prices down because that means interest rates are up, and they want low interest rates. Doesn't matter. The market thinks interest rates should be up. They're going lower, and lower they have gone. A week ago, they had what is potentially an exhaustion bar down, but they just continued lower and would have been a great exhaustion bar had they closed down here. But instead, they recovered and closed back above the middle of the range, so that's not an exhaustion bar. But it does leave resistance this week in the 160.20 area. That's that lower moving average, which they appear, so far anyway, to be holding. It's possible that the support in the 157 area here will hold them and they consolidate. In fact, the size of last week's range actually makes that the highest probability for this week. But I can't rule out them making a move up to the one above 162 here, 62.08 or 9 there. That could happen also. But 57 to 60.20 looks like a really good possibility that they just stay in there and consolidate. They're kind of got everybody scratching their heads trying to figure out how the heck did we get down here so fast. Now, stocks are even more fun. Last week, we called support around the 3805 area. They went to 3804 and 3/4. And then we were looking for the upper region at 3928. They went to 3934. Now, the way I analyze markets on any given time frame is I look for that price bar for that time frame to make both a high and a low, of course, and they're going to make one before the other. So I try to determine which is being made first and ride it till it made the other. Well, once they had been down to 3805 and up to 3934, then it's quite possible that both the high and the low for the week are in, so the probabilities are out the window for me. I don't know what to do anymore. In this case, they tumbled in a major way. They took out the low and basically extended the range by a bunch. Didn't quite close below everything, so it's not an exhaustion bar, but still quite a weak bar. And that's not unheard of. It's just abnormal. And so now this week, that gives us the resistance here around 38.90 and support down here in the 37.50 area. I would have expected them to go down to support first. They have not. In fact, Monday was the biggest up day they've had in 9 months. But they, despite poking through it, seem to be kind of holding the resistance here. So that's a fascinating thing to watch. Could they move back up and get above 39.40? Yeah, absolutely. They could. That's a possibility, especially as strong as Monday was. But if they drop back down here to the 37.50 area, or even if they break down below 3,700 of the Milk-Keltner, wouldn't be too terribly surprising. Now, I'm going to show you why that's not surprising in a second, but analyzing this market in a vacuum, it looks like they've held resistance and want to go lower. Doesn't mean they can't go higher. It just looks like they might want to go lower. If they do go up, 39.40 looks like a pretty good target. Now we're going to go look at the QQQ representing the Nasdaq, and you'll see why I have sort of a negative bias. That is, last week was clearly an exhaustion bar here. They never got up to resistance. They just went lower and closed low enough to, well, back to repeating myself, consist of an exhaustion bar. Now what that exhaustion bar says is that they will probably go back up the next week. They're probably exhausted and they'll go back up, and the target they should get up to is 322.91. Well, they've already been there. They got there Monday, but they seem to hold that as resistance and have started back down again. Now, that being the case, there is a lot of good support between 307 and 308. You have both the projected low and the mid-Keltner channel in that vicinity. So that certainly is good support. But that would also be taking out last week's low. And there's no guarantee even that that will hold if they get there. Now, Granted, they don't have to get there. Again, the size of this week, similar to what we were talking about in bonds, is big enough that just consolidating and having an inside bar certainly kind of looks right. If you just squint and look at the chart, that's kind of okay. They could do that. But this market certainly looks like to be in a weaker setup than the S&P does. And it is quite possible for them to have different price patterns and move in different directions. You just don't get a major move in the stock market in general until the indices agree. So I'm kind of thinking if either of them wins, kind of looks like weakness would be the way to go. A little scary, but that could be the case. So that's what we've got for you today. I hope you can find something profitable to get yourself into. Thanks for checking in to see what we're looking at.